Good evening, everybody. Happy Wednesday. It is still May the 11th, and we're about 3 hours after the closing bell. I'm your wealth guy. Let's talk money. Let's talk market wrap up on this, again, another crazy day in the markets. All right, everybody. So again, as usual, first, I want to thank you all for tuning in and watching. If you like what I have to say, please feel free to like, share, subscribe, and most importantly, comment. I'd love to see what you guys have to say and hear what you guys have to think about the markets. So let's get started, because another wild day in the markets. We saw a lot of volatility, a lot of swinging. The Dow swung probably somewhere in the range of 600 700 points between peak to the close. Unbelievable day. But the main thing I really want to look at here is the US, or the S&P 500, which did not hold that $4,000 mark. It is now currently sitting at 39.35. A bit concerning, because I was really hoping to see that $4,000 or 4,000 point mark really get held up. And earlier today, it really looked like the market was going to hold up well. Markets really opened up to the green. Market conditions look good. Granted, yes, we did have some negative information here. CPI was another miss, sitting at an expected 8.1, but we actually came in at 8.3%. So, I mean, it's not surprising. Nobody should really be surprised at this point as to what's going on with CPI. Been talking about it for weeks, been talking about it for months. The Fed has even said it's going to continue to go up. So it really shouldn't come in as a surprise to anybody. But it's just the volatility, I think, that's really concerning to a lot of people, because you start in the morning, and again, this is Wednesday, so 3 days in a row now, the market's opened up relatively strong and then pulled back by the end of the day to turn red, which is, again, it's volatility, but it's luring people in, from what I understand from the trading, from my trading groups, that they're pulling people in, they're getting whipped around, scaring them back out. And even for long-term investors, it's one of those scenarios where, you think you may have reached the bottom, you're hoping that the markets are going to turn for you in your portfolio, and they just continue to go to the downside. Now, is there a lot more downside here? Quite possibly. I mean, if we take a look at where the next level of support is on the S&P 500, it's sitting at about 3,600. And as I said, we're about 39.35 right now, if I'm not mistaken, 39.35.18. So there is a few hundred points to go before we see the next major level of support. The interesting thing is, to the upside, not a heck of a lot of major resistance. There are levels of resistance, but we can see the buying coming in. So we know there are definitely buyers at these levels. It's just the selling pressure by the end of the day really turn around. And there are a lot of people covering shorts and things of that nature right now. But we'll see what the market really has for the next couple days. I'm not really sure that we're really going to see too much of a positive momentum. I can't see where the news is going to take it. But let's take a look at other areas of the market, because the market really today was, if we look at the widespread, not every sector was bad. Let's have a look at crude, for example. Currently, crude was up a little bit on the day, finished at $105.77. So again, more positive momentum for crude here. Taking a look at the US dollar, it was also up, sitting at 104. The 10-year yield was pretty flat on the day. Originally, it was down quite significantly. So again, more positive momentum to the upside for the market. But again, by the end of the day, it pulled back, which is these days almost as surprising as CPI numbers, or should I say not surprising as CPI numbers. The big one we should talk about today is actually cryptocurrency, because right now Bitcoin is currently sitting under 29,000, sitting at 979. So very close to that $29,000 mark, but very far off its earlier 31K. Ethereum not really faring much better right now, down 10% in the last 24 hours, sitting at just over 2,000. So a lot of negative pressure sitting on the crypto market. Again, I am long-term bullish, but short-term, I've been saying it for more than a few weeks now. I'm not really seeing anything that's going to keep the momentum and hold it there to the upside. So it's not surprising to see crypto continuing to slide here. Let's have a look at commodities today, because gold actually finished in the green, which was surprising because gold was under a little bit of pressure, but then it turned into the green and continued to push to the upside. Currently sitting at 1852, and that includes markets right now because those haven't closed yet. Take a look at silver. Silver is still below $22, sitting at about 21.5. Really would like to see silver get back up to about the $24, $25 mark. Not really sure. For me, this is a great buying opportunity right across the board. And in fact, I do plan to put in an order later today for physical, both silver and gold, as these prices are actually still very, very much attractive for those of you that are into the physical markets. Now, if we take a look at the rest of the commodities market, the vast majority, energy did very well today. We see a little bit of positive in agriculture. However, if we take a look at livestock did fall under a little bit of pressure today. But right across the board, we're seeing a little bit of positive momentum, at least on the commodities side. Again, I'm very long-term bullish on commodities, and I do think it's going to be a major part of the next cycle, even with energy. But keeping an eye on these numbers here. The main ones, again, as per usual, taking a look at that 10-year yield, still sitting below key numbers, so 3 sitting below 3 right now, sitting at 2.925. We'll see what the rest of the market holds over the next couple days. Again, I'm not really anticipating anything major to push it to the upside, but we're just going to keep an eye on everything from here. Overall, again, keep your portfolio in check as far as your risk tolerance is concerned. If you're finding that it is a little bit too risky, there's nothing wrong at all with leaving the market. For me, my portfolio and what I see, I'm not really seeing anything too scary to the downside in terms of a crash. This is just a typical market pullback or correction. And the truth of the matter is, I'm not really scared at this point, not nervous. Don't ever really get that way anyways. But if you find that you're losing sleep at night, as always, adjust your portfolio accordingly. But that's it, everybody. For now, I will see you tomorrow at the opening bell.